Ladies and gentlemen, welcome to the study. Going to be talking about what an ETF is and how to invest in them. And before we proceed any further, I would like to state that the information in this video is not a recommendation to buy or sell any securities and is for educational purposes only. This video is for those who say, I will start investing someday, or I'm waiting for the market to go down or pull back, or hey, I don't have enough money to invest, so I'll figure it out later. Well, you're in for a treat because the ETF does such a huge favor for helping out any of those people who are saying those exact three messages. So the ETF actually, before I jump into defining what an ETF is and how it works, is that we need to remember that when we're investing, we should be looking at a longer time frame horizon. This is just going to make things a lot more easier rather than looking at the day-to-day action. So your ultimate goal should be to look at a long time frame when investing. And if you do this and look at history, like I have pulled up here, you'll notice that looking at the S&P 500, which is a common benchmark used to measure performance in the stock market overall. It has the 500 feature leading U.S. companies, and the average 10-year return is about 12.15%. So you are getting about 12% back on your money, which is pretty good. And when you look at this chart, you could see there's a lot more green than red. The times that you do see red, there are some big drops, and these happen to occur at very key moments in history, such as the Great Depression, fast forward to Brexit, financial crisis, and then 2020 with the COVID drop. So you have all of this happening, and you are trying to invest, and investing does collide with geopolitical events, world news, all those kind of things come into play. But if you are aiming for the long term, you scroll all the way down here. Check this out. This goes from year 2022 to all the way down to 1928. And you can see here as you scroll up, look at this number right here that I have my mouse on. As the years go by, that number just keeps on creeping up, crawling upwards, and the idea here is that more and more money just keeps on pooling into the stock market as a device to generate wealth over time. And you see the rich do this, the wealthy, and it's just gotten so much easier nowadays to do it. Now that brokerage platforms don't charge you for each stock trade or ETF trade on commissions and all that stuff. So you really have the green light here to just start putting money aside, invest it, kind of treat it like another savings account, really, but a savings account that is gaining you money back, making your money, your hard-earned money from work, protected and growing over time. And so an ETF, you may be asking, is and simply it's an exchange-traded fund. And an ETF is a low-cost option that trades like a stock. So in other words, yes, you could buy it, you could sell this type of security when needed, just like a stock. And pretty much an ETF is a basket of stocks, so you don't have to worry about picking any stocks, researching companies, when you could just get one asset. So I'm in the ThinkOrSwim trading app here, and I want to show you guys exactly how an ETF looks like. An ETF is a basket of stocks, so it's going to have all these stocks put together inside a nice one, and you have all of these under one asset. It's pretty incredible. So you go to fundamentals up here, you click exchange traded funds, which are going to be your ETFs, and we have the SPY, the SPYG, and the SPYV that I'll be covering in this YouTube video. We click SPY, and here we are. We have the SPY right here, and this is a very good example. It tells you right here, the fund's top 20 holdings. So this SPY right here, low cost ETF option. It's going to be, once you purchase this ETF and hold it, you collect a dividend. That's another benefit here. For holding onto this ETF, you are going to have exposure to all of these companies in here. And you can hit here, show 30 more holdings. You have the breakdown, how much weight is, or concentration is allocated toward those companies. The number of shares that the ETF has in these companies or stocks. And you're getting a dividend from holding on to this. It's a dividend. It's a payment paid to shareholders as a thank you for investing into the fund or company. And the cool thing about this is that this doesn't take that much time to set up at all. I'm giving you all this information in a quick video just to show you how this works in just under 10-15 minutes. And the important key here is to make sure you guys get educated, get started, because your future self is going to thank you for getting started. And those dividends and capital appreciation from these stocks going to new highs is going to protect your hard-earned money, and it's going to make this ETF further grow. And then in the case of inflation, you are going to be protected from that because you have your money in assets, and assets are going to work for you. And general increase in prices, which is inflation, and those goods and services are going to be more expensive. So that what happens is that lowers your purchasing power. And guess what? Since you're invested, you protect yourself from all of that. So it is a very beautiful thing to have started, and it's pretty incredible how this is just a overall market of the S&P 500 ETF. They have ETFs out there just for about anything you can think of: healthcare, financials and banks, food. For the purpose of this video, I'm just going to be showing you guys something simple, the SPY. And some of the advantages to ETFs is just that they're simple, easy to get started, to handle your portfolio account. They have less risk versus holding an individual stock in a specific company, and you may not get as much gains as holding an individual company versus holding an ETF, since, remember, this is broad. You're going to have exposure to all of these companies containing various different types of investments. So, and if you go over to the left here, you can see you have a pretty high concentration in information technology. And if you click this arrow down, you can see a further breakdown of software, IT services, all the breakdowns here: healthcare, 3% in pharmaceuticals, 1.7% in biotechnology. So there's a lot of good information here. One example I do want to show is if we go back to the fundamentals here and the ETF, I pointed out SPY-G and SPY-V. If you type in SPY-G here, you're going to get the S&P growth portfolio ETF, and this is going to be more focused on growth companies. And if you go to the SPYV, you're going to notice that this looks a lot more different. You have a value-focused approach here. You have Berkshire Hathaway, you have Johnson & Johnson, P&G, ExxonMobil, Disney. These are all companies that are considered value instead of growth. You're going to get a little bit more of a dividend payout here, whereas the other companies are more focused on growth and reinvesting for R&D and making their revenue increase higher, having those assets working for them. And just to give you an idea or a better illustration of how ETFs have become so popular and such a big industry, according to data from Statista, I think I have a link here. Yeah, you could see that the ETF industry had only about 417 billion US dollars assets under management, and has ballooned up to 7.7 trillion US dollars in 2020. I don't know what it is now, but it just keeps going. And there's so much opportunity here. And the best part is, again, you just have to create an account. You go here. If you want to start buying, you can buy any amount. Boom, you're set. It's really just simple and straightforward. Without going any longer into this video, if you guys do have any more questions, you can let me know. This was just a simple breakdown of how easy an ETF really makes everything with investing, rather than picking and choosing so many different companies and then trying to keep your portfolio balanced and make sure it's not too heavy on one side. You don't have to worry about any of that. You just purchase this one asset in the SPY or the SPYV or SPYG, depending if you want more upside and growth. Yeah, so if you enjoyed this video, make sure to leave a like, subscribe for more content. You can visit me at thetradestudy.com, and I will see you in the next one.